Davos is over and done for another year, and in the coming week, attention will switch to a pair of central banks. Although whether that's an improvement or not is something that only you can judge for yourself. First up to the plate will be the Bank of Japan on Tuesday the 23rd of January, while the European Central Bank will make its first policy pronouncement of 2024 on Thursday the 25th. In theory, the two monetary authorities are about to head in different directions. Economists and investors are wondering whether the Bank of Japan might start to finally tighten policy by taking interest rates out of negative territory and throttling back its quantitative easing or QE program. While the question in Europe is whether the European Central Bank is about to actually ease policy by cutting rates. The BOJ is expected to move only when it sees signs that inflation will hit its 2% target on a sustained basis. The last published figure was 2.8%, and increases in the headline consumer price index have exceeded the target for nearly 2 years, while the Bank of Japan's preferred reading, the so-called core inflation figure, don't ask, well, that's done the same. Even so, the producer price or factory gate index has cooled quickly to an increase of just 0.3% year on year in November from a peak of more than 10%. And that's often seen as a lead indicator for consumer prices. In addition, wage growth is still modest in Japan. November's meagre 0.2% year-on-year increase was reckoned by economists to give the Bank of Japan every reason at this meeting to leave its main policy rate unchanged at minus 0.1%, where it's been since 2016, and stick to its target for its qualitative and quantitative easing program that the 10-year Japanese government bond yield should fluctuate around the 0% mark, with a ceiling perhaps of around 1%. Nor is the ECB expected to make any sudden moves either. The main refinancing rate is 4.5% after a series of quick-fire increases, and the main focus here will be on whether President Christine Lagarde drops any hints as to when it may move and what pretext will be needed for it to do so. A return to the 2% inflation target has already been cited here, on the way down, I should stress, rather than Japan where it's on the way up. And markets have dashed to price in at least 5 1/4 point rate cuts from the ECB this year, down to 3.25%. Interestingly, Spanish and French members of the Governing Council have done nothing to dampen such speculation in recent statements, and the ECB also continues to shrink its balance sheet and thus undo some of the quantitative easing stimulus it's applied so liberally for so long. Back home, trading updates again dominate the corporate reporting schedule, even as the fourth quarter result season hits top gear in America. Just 3 FTSE 100 companies have scheduled statements for the coming week, but there could always be unscheduled announcements, and there's a long list of mid and small caps who are due to update their shareholders as well. Names which may be worthy of further study include the following, although do watch out for any late changes to the dates. Premier Foods on Tuesday the 23rd, Computer Centre, Aberdeen, Tullow Oil and Akrol on the 24th, Intermediate Capital, St James's Place, Wizz Air, Halfords, Britvic, Dr. Martens, Fuller Smith and Turner, Foxtons and CVS on the 25th, and Paragon Banking and WH Smith will round out the week on Friday the 26th. But the company which could just cause the biggest fuss in the week ahead is Associated British Foods. The owner of Primark, British Sugar, Ovaltine and Twinings is due to report a trading update for the first 4 months of its fiscal year on Tuesday the 23rd of January. Shares in AB Foods are up by 1/4 in the past 12 months, helped by improving earnings momentum at Primark, and easing input cost pressures and improved consumer confidence, which have combined to provide upgrades to earnings expectations during the year and also fund share buybacks. The benchmark for this 4-month update will be the guidance given alongside the full year results for the full year to September 2023 back in November, when AB Foods for fiscal 2024 forecast higher profits compared to last year's stated earnings per share of 134.2 pence and adjusted EPS of 141.8p. Management also forecasts strong cash flow thanks to increased earnings, lower working capital needs and lower pension contributions, albeit with increased capital investment. So, in terms of the headlines, watch out for the following, where any guidance for the whole of fiscal 24 should really be more important than the numbers for the first 4 months of the year. Sales are expected to rise 5% to £20.7 billion for the whole year to September 2024. The benchmark for the first 4 months It's the £6.7 billion it registered in the equivalent period a year ago. Earnings per share for the whole year are expected to reach 168p against 134.2p on a stated basis, before advancing again to 159p in 2025. Having looked at the headline sales number for the period, analysts will then dig into the divisional trends by sales in particular, and any guidance given on profit and profit margins at grocery, sugar, agriculture, ingredients and retail, with retail again the most likely area of attention. For 2024 fiscal, AB Foods has already suggested that Primark, or retail, would show a modest increase in like-for-like sales and a larger increase in stated sales thanks to store openings and its online rollout. The adjusted operating margin at the retail is expected to exceed 10% for the year, compared to the 8.2% earned in fiscal 2023. Meanwhile, AB Foods has also said that sugar would deliver a substantial increase in profits in the coming year from last year's 119 million. Agriculture would also increase adjusted operating profit from 41 million last year. Grocery would come in with broadly flat earnings, and ingredients would show a modest decrease in sales and profits. AB Foods is unlikely to discuss wider capital allocation issues until its first half results in April, but do note the company is running a £500 million share buyback programme that adds to an identical scheme completed last year, when the FTSE 100 company also supplemented an increase in the ordinary dividend with a special payment. More strategically, watch out for an update on Primark's store opening plans in Europe and America in fiscal 2024, as it targets 530 stores by 2026 from the current total count of 432. Also look out for updates on the online rollout, as well as comments on input cost inflation and pricing across all of the operations. I hope that you and your families are all well and in good spirits. Thank you for watching, and I look forward to seeing you again next time.